Alrighty, we're live. We're good to go. Perfect. Alrighty, welcome guys. Welcome. We'll just make a few posts. But those who are here, just let me know in the chat. I think today, to be honest with you, we'll do a bit of live market reading, but we'll just talk about a few things because it's been quite a while since I've gone live for the community or in general had one of these calls. So I'll let everyone settle in. I'll make a few little posts here and then we should be good to go. Let me know if you're from Discord, if you're from YouTube, Telegram, and then we'll kind of keep this on. And ask me questions too. If you've got questions in the meantime, happy to answer. So today in Australia, it's Monday, start of the week. And yeah, we're going to have a bit of a chat. I think a bit of a community call. And I can probably answer the questions. I've got another screen here. So if you have questions, feel free to ask. Discord, New Zealand in the house, Discord, perfect, yeah. Let's get into it. Let's just stay on here for maybe half an hour, see how we go. Maybe talk about the next macro. This is like a bit of an Asian session stream. But yeah, overall today, I just wanted to discuss a few little bits and pieces. It's been about 2 weeks since we've had a call, 3 weeks. There's obviously been some stuff happening outside of trading for me, but I want to make this a consistent thing, and I try to vary it a little bit in terms of having the calls on Discord and also then on YouTube. Let me just shift this a little bit smaller. Just going to adjust a few things on my end and then we'll get started. But yeah, any questions, ask them in the chat. I can see the chat here, so all good. We'll talk about a bit of psychology today, a bit of risk management, a few other bits and pieces. But this is an opportunity if you've had questions to ask. I do have a video actually coming out. I've recorded it. I've got 2 coming out. One's going to be a question and answer where I've gone through some of the questions on my YouTube. And that'll be coming probably, I'd say, tomorrow. And there'll be another one which is about macros and applying the strategy. So let me just fix this up. Shift that down a little bit. And then I might just bring this up on my screen here, so you can see the time. Beautiful. Camera on, good to go. Beautiful. We're ready. We are good to go. So yeah, if you have questions, let me know. But I thought today we'd do something a little bit different. We are going to look at the markets live. If you're kind of curious here, this here is a 15-minute fair value gap. So a lot of people ask me to do Asian session stuff and they go, well, Ruben, can you do Asian session? Can you do New York? I may be doing some more New York stuff in the next couple of weeks because I'm going to Thailand for most of May. So I leave on Wednesday and I should be there till the end of May. Now, 15-minute for me is how I start most of my narrative building. I've got some other stuff on the chart, but you don't need much more, Keep it nice and simple and literally just mark out fair value gaps on the 15-minute chart. Start with that. And realistically here, there's only 2. Just start with that. And then just look as we approach the macro to see if price actually develops or does anything important for that time frame. That's what I'd say. So you don't have to catch the short here. You don't have to catch the short. Like, yes, since the open, price, as you guys can see, has, just stepped down into that gap. You can do that if it fits your model, but doesn't mean you have to do that, if that makes sense. So always just give yourself the opportunity to catch reversals, catch continuations, and it'll be in one of my next videos probably, but continuations, guys, I want to see a pullback. I don't enter when price is grinding like this. It's not my model. And especially with all the low resistance, I'd rather wait to see if we can get some kind of pullback. That's what I'd be saying. But yeah, that's kind of where we are. This spot as well, like if you just remember, and I'm going to make a video on this, it'll be posted this week too. If you just remember that fair value gaps act as support and resistance, and the market only moves for two things, or three, we're going to say three. One's fair value gaps, one's liquidity, and one's to rebalance the range. Then in reality, you can simplify your trading. You know, you can make this a bit lighter. You can look at this one down here, and you can just wait and be patient. So that's a big thing. Some of the most common questions I get, which I'll answer anyway in the next video, a lot of people ask me about like, can you enter before macros or after macros? That's probably the most common question now. Or do macros work on Forex, or is it only futures? It's yes and yes to both. From Thailand, nice. I'll be going there pretty soon. And yeah, it's yes and yes to both. So realistically, the macro just gives you the time frame that you can enter. That's the main thing. And then you pair that with price to have a high probability framework. Macros are not 100%. With the premium Discord the last couple of weeks, it's been pretty good. It's been pretty good. And if you're from the premium, let me know in the chat below. But it's been pretty solid for a lot of people. A few people passed accounts. A few people got payouts. And we just look through the London session. That's pretty much it. I'll post analysis for the Discord usually during the Asian session when I'm free. And then that's pretty much it. So let me have a look here just at ES. And I'm going to compare the two. So I'm going to compare the two here. All I'm looking for, if you're curious, I'm looking for any SMT between these lows. So if you have a look, at the moment, they're both forming higher swing lows. There's no SMT. But if one sweeps a low and one doesn't, that could be important for me. That's it. So while the macro is not here yet, you just kind of be patient and wait. You also look at previous patterns, and again, use this opportunity, take notes, do what you got to do. You look at previous patterns. So in a previous macro here, I reckon some people may have gone for a long over here. I think nothing's wrong with that. I think it's a good trade. And maybe you took a long from here. Now, depending where you put your stop loss, normally I say below the bodies, but maybe you wanted to make it a little bit tighter as price plays out. I do think that price starting from here and moving here warrants a partial or at least price to go to break even. So if you took a long here, I think it should have been a partial or break even. That's what I'd say. Normally I'd say go for a 1-to-1, but what happens is as price kind of moves down like this, let me get rid of this, respects this inversion, then displaces through. Again, here's the key. Displaces through this swing high. That is when I'd probably trail my stop from down here to up here. And then as price trickles down, displaces through, where's my stop trailing to? At least below this low, which again is around break even. And then maybe I'd trail it higher. I didn't enter this trade, but just speaking out loud here, for anyone that did. Dren says you took the long for, yeah, for a break even. I think that's more than feasible enough, you know. We have a 15-minute FVG, macro, nice inversion. It's a good trade. So you're going to get that. Could we use the gap again? We could use the gap again, but we'll just have to wait and see. So that's a big question. Prop firms is a big question too for a lot of people. I've got a video about that in terms of different ways you can do prop firms. I've got plenty of stuff on YouTube, plenty more to come, plenty for free on YouTube and in the Discord. We've got a good community, both free and paid. But ultimately, if you study what I've got on YouTube and you put in the hours outside of that, there's more than enough. That's what I'd say. There's more than enough. So now we just wait. If we look at the 15-minute chart, we're about to close below this 15-minute gap. And someone might actually know in the YouTube channel, but what do you reckon I'd be doing? And you might be from the Discord or from YouTube. If we close below here, what do you reckon I'll do with this wick? What do you reckon I'll be doing with this wick? This one. What might I do with a wick? If you know, let me know. Otherwise, we'll talk about it if and when it happens. This wick right here. Wicks can be treated like something else. They can be treated like something else, especially when a candle has a really long wick. And this is from the video I've got coming out soon. But yeah, that's a big question. Prop firms, wicks, a lot of people, I think, I don't know. The main thing I see when I talk to people, whether I work one-on-one or just in general, is not accepting losses. Like, losses are going to be a part of the game. I talk through losses with my Discord. I call out losing ideas. It happens. But as long as you manage risk well enough during the losses, you can come back and take the winning trade. That's the main thing. And as you're saying there, Dren, 100%. So you can mark out this wick, just pretend it's a fair value gap. So I'm making this a bit lighter now because we're starting to close below it. So I don't really want to like have that in my head too much. And you can just measure out this wick. You can mark out the quadrants, right? You can do something like this. And I'll get it up so you guys can see. But yeah, something like this. My intent's a little bit slow, right? So at least I've got the halfway point marked out. I'm trying to mark out the quadrants, that's fine. But again, 0 or 1 and then the halfway points here. We can also get up the different like quadrant levels like that. And you can just see, like, just observe it. And these are things that you have to do as well for yourself. Wicks, yeah, wicks are fair value gaps. They are fair value gaps. But you have to observe this stuff for yourself. So my whole idea with the Discord or YouTube, I want to give information, but I want people to build confidence for themselves too. That's the main thing. Confidence, you have to have confidence in what you're doing. Yeah. And it doesn't have to be complicated. Just pretend this is a gap, a fair value gap, right? And you can just start with the 0.5 and the 0.25, like the first two quadrants. These are the first two quadrants, and see if price acts and does something important there. That's the main thing. See if price does something important. And if it does, it does. If it doesn't, it doesn't. I mean, nothing is perfect in trading. Sometimes there'll be setups that are just very easy. And I'll talk about it with the Discord. We call them typical versus atypical setups. The typical setup is when, for example, you sweep Asian low. Say you trade London session, you sweep Asian low. You're in a macro, you have an inversion gap, you have low resistance, and then price just moves the opposing way. It's easy. Anyone's probably going to take that. The tricky part is where they're not, typical setups, and you've got to kind of draw on other things to build confidence. Right? That's what I'd be saying. But you've got to be careful here, and I say this as well to the Discord, be careful. If we've done this before and then sold off, if we have reversal signatures, just be careful, mitigate risk early, go to break even early, and just manage risk as appropriate. So we're looking at that. That's the quadrant level. We're still technically inside of this 15-minute gap. We haven't actually closed outside of it yet, which is quite interesting. So I'm measuring this long wick and treating that as a rejection block is what ICT calls it. Rejection block is just a candle with a long wick. That's all it is. So keep it simple, keep it simple. And then there's a macro coming too. So you could, again, look for longs. I'm not looking for shorts. Like, I'm not going to talk through shorts. If it comes down here, I look for the reversal anyway, because we've just been stepping down for so long. But that's the biggest thing. Any questions as well, ask me in the chat. Happy to help out. Big questions people ask as well on the topic of risk management. A lot of people want to know about, and my computer's being a bit iffy about risk management, right? And then also they want to know about, risk to reward, or, what's the win rate of a particular model? Well, it depends. Like, even using the macro model that I teach, that I trade, I reckon in the Discord calls, like if you hear from the premium Discord, I reckon at least 60 to 80% the last 2 weeks. The last 2-3 weeks has been very good. There are some weeks where it might be closer to 60, but I think the last 2 weeks for us has been quite nice. Last week, for example, we didn't have a call on Friday, but Monday was an easy day for us. Tuesday, not many people took trades, but overall would have been positive. Wednesday, easy. Thursday, pretty cruisy too. And then Friday, we didn't have a call, but there were some nice setups, which is what my last video is about on YouTube, which is like a 40-minute video, just doing like live market reading, something similar to this. So now what I do is I'm going to remove this. Look, nice and easy. Leave the halfway point up and just observe. That's all you need to do. Just observe price action, let it do what it needs to do, and then go from there. But yeah, that's the biggest thing. People ask about win rate, or they ask about, Is there a magical strategy? There's no magical strategy. Sometimes some models will work really well. And sometimes I look in the morning, being from Australia, I wake up in the morning, I look at what the New York session's done. And I say to myself, like, it's been beautiful. 10 o'clock reversal, easy macro reversal. Other times it's not beautiful and the best trades happen a bit earlier. So you take the good and the bad. And I guess that's the principle that I like to preach now for a lot of people. Let's see if this works. Yeah, perfect. Risk on versus risk off. That's something that takes time. So risk on versus risk off, and knowing and understanding when, you know what I mean, when price should, you know, when you should put on more risk and when you probably should put the brakes on a bit. That takes time because you need data to build, you know, build confidence as to when you're going to do that. So yeah, that's kind of what we're looking at the moment. And that's the main thing, I think. So we're going to remove this now. I don't really need that for the moment. And I'm going to show you on the 15-minute chart. This is what it looks like. So let's go 15-minute time frame. So notice how we're tapping into this gap now. We're tapping into it. That's all you need to know. You're tapping into it, and then you still need to have the reversal signatures to take it long. It's not about, oh, there's any inversion fair value gap, I'm going to take it long now. No, there needs to be enough impulse if we drop down that far, and there needs to be a reaction. There needs to be those things that are paired together to make something high probability, in my opinion. So that's what I'd say. That's what I'd say. And again, yeah, you got to be patient with it. Some days, like on the Discord, the trade will happen in the first macro. We'll hop on normally. So if you're curious, we hop on at about 1:40 a.m. and then usually it's at least an hour. So if we catch a really, like if the best trade happens in that first macro, 150 to 210, I'm probably going to stay on maybe for the second, then I'll call it. If there's no good trade in the first macro, I'll stay on for the second, sometimes the third, and probably we go up to about, 2.5 hours probably on the call. So it's a good thing, good experience for a lot of people to learn and have a look at things. All right, macros here. So this is the next macro. And you just be looking for an inversion. If you want to be safe, you wait for a couple inversions or an order block or something like that. You wait for more, essentially. You can enter a bit high up in the move, doesn't matter, or you can take a risky entry. I tell this all the time to my Discord. There's risky entries, safe entries, but there's good things and bad things about both, which you have to accept, you have to accept essentially that if you take an entry lower down, if you're right, then yes, you're going to hit TP quicker. But if you're wrong, you may have to re-enter a few times. So you have to control your risk if you're doing that. Not every trade, in my opinion, you should be putting on the full risk. It's not recommended, not recommended. So yeah, we are tapping into that 15-minute FVG now. We're approaching the macro. I'm looking now at price. This candle looks like we've got 56 seconds on it. We're probably in the bottom portion, I reckon, of this wick. Probably in the lowest portion of the wick. So I'm going to mark that out. It's pretty simple, but when you think about it, you just implement things. You just look for certain things to repeat and then wait for the model. And then if it comes, then you take the trade, but you have to accept that you've taken the trade. And if it doesn't come, you wait. There's plenty of people making money on the way down, but there's also plenty of people that can make money on the way up. Same goes for here. People making money on the way up or the way down. Same goes for here. Money on the way down, money on the way up. So there's different ways to trade depending on your style. And that's the best way to put it. There's no right and wrong, I think a lot of people just, come into trading. I was one of those people that idolized ICT, and I do thank him for teaching, but I think there's so many ways to trade now that you've got to be realistic about it too. Just because someone doesn't trade how you trade doesn't mean they're any worse or better than you on any given day, because trading it's not something that you're going to do for one day and go, yeah, I'm successful. It's something that you do, every day or every couple of days whenever you can trade, and then you build confidence as time goes on. I mean, I would take that as a compliment in a way. Kane's a great trader, and that's the thing too. Like, you got Kane, you've got Jade Cap. I respect a lot of those traders, most of the traders who don't get involved in too much talking, on the internet. I think there's a lot of interesting things that happen now in the Twitter space. But a lot of people that trade are from, a lot of them are from the US or the UK. There's not that many from Australia. And even like women in the space, you've got Tori Trades, Tanya Trades. There's a lady called Candice, but not from Australia. Not many that trade. And I think it's because of time zones potentially. And a lot of people say in this current time frame with daylight saving here in Australia, most people, if you're working say 9 to 5, or even if you're a trader, you work 9 o'clock to adrenaline, right? Yeah, 9 o'clock to 3 o'clock. Say you're a trader, or 7 o'clock to 3 o'clock. By the time you get home, you've probably missed the first macro, so you may be trading the next couple. But if you work a 9 to 5, by the time you're home in Australia now with the time zones, the only time you can trade is kind of outside of that kill zone, which is still fine. That's what I tell people all the time. If you can't trade a kill zone, just trade outside of it. Any time is tradable, and that's a big change for me too. That's a big change for me too in the last, year, because I've been trading now for exactly 2 years from this day, I think, or yesterday. The first message that I had with my mentor was on the 5th, 2023. So yeah, you can take trades whenever. Sometimes the good trades happen early in the sessions, other times they don't. Let me just bring this up too. There you go. But that's the way I like to see it. You can trade whenever you're free. Aussie here, summer trading sucks for us in Melbourne. Start trading, I want it. Yeah. I mean, I would encourage you to try out London session, or even try out the time between London Open and New York, because you could trade between 5 a.m. and 9 a.m. New York time, and then you still get a good sleep. I started with New York time because my mentor was from Canada actually, and he traded New York session. So it was all right to start. It was okay to start because I started around this time. So it'd be about 11:30 open, but it'd still be very late. And then when times went back, then I'm like, what am I going to do? I couldn't sustain it. So that's why I started trading London session, because I thought there's got to be a way to trade earlier, and then earlier, and then earlier. And then now, Asian session's feasible, London session's feasible. In between sessions is feasible. Whenever, you can trade, you can trade. And ask your questions. I'll answer them in the chat as we're waiting. But yeah, that's what I'd say, Damon. That's what I'd say. Like, consider trading different times if you're struggling with, lack of sleep, because it's not sustainable. You want to be able to make money consistently or enjoy the process of trading, but not be impacted externally. And for me, having lack of sleep for it was probably a good 2-3 months. It messed me up. It messed me up like big time. The circadian rhythm impacts like a lot of things physiologically in the body. It's pretty interesting how it works. And there was times where I'd trade New York session, I'd go to bed and then wake up and trade PM. Not sustainable. Which prop firms allow trading or live trading accounts? Depends what you mean by that. Like, I know Top Step, they'll move you to a live account. My Fund of Futures, they've got live account options. Those are probably my two favorite ones. Top Step and My Fund of Futures. There's a few more I might try out soon. Alpha Futures, they're getting into futures too, but we'll see. Like, I'm gonna put the feelers out, I think, when I'm in Thailand, try a few things out. And then Max says, can I use the 1250 to 110? Yeah. Whichever macro you want. Because every hour there's a macro. So the best way I describe it, and maybe write this down or save this part of the video, the best macros are the ones that line up with price structure. They're the ones that line up with higher time frame fair value gaps. They're the ones that are in premium or discount. Those are the best macros. It's not about, I trade Silver Bullet and then Silver Bullet's going to have the best macro. It's not the case. Sometimes the 350 to 410 macro is the best, and the start of the session is horrible. So that's what I'd say, Mac. You can use 1250 to 110, 250 to 310, 150 to 210, and the list goes on. Every single hour there's going to be a macro, every single hour. And you can enter 5 minutes before, you can enter 10 minutes before. if you expect the macro to move, you can enter 10 minutes before and then take the trade wherever you want it to. So that's what I'd be saying. You got options, just know that. Probably never, to be honest. I mean, so here's the thing. My partner, she has a job here in Australia, which, I mean, she's an occupational therapist. She could get a job overseas, maybe potentially. Like a lot of traders move to Thailand and whatnot because it's cheaper, but I'm kind of used to the area I live in. I like kind of where I live. I wouldn't mind though. I wouldn't mind being in Thailand for a couple months out of the year, or travel somewhere like that a couple months out of the year. But I don't think I'd ever move out of Australia, to be honest. Long term, anyway. Yeah, I mean, I'd love to meet some of those guys. I think there needs to be some Australian. It might not be me, but it could be someone else. Doesn't matter. But there needs to be some Australians into the mix. I think everyone's from America or the UK. Like you'll see on Twitter, all the spaces. Everyone's from those areas. Can I explain what a macro will do? I never understand that. I don't know what a macro is supposed to do. Well, I'll answer that. But then you have to put in the study, right? You have to put in the work yourself too. Write this down. A macro can spool. All that means it moves very quickly. So a macro can move very quickly, number one. Write that down. Number two, a macro can accumulate. That's it. That's it. So think about what you can use accumulation for in terms of the power of three, and then think about if a macro can spool, why would you want it to spool? So for example, we can use today's chart example, right? This gap that we're sitting in, this green box, this is a 15-minute fair value gap. With any fair value gap that's quite large, we can do the same thing that we did to this wick, and we can mark out the halfway point. We can do something like this. We can mark out the quadrants, we can mark out the halfway point, and we can see how price reacts. So if you were to ask me what I'd want this macro to do, well, this macro, in my opinion, could dig further down into this gap, or it could spool back to the upside. I don't need to know which one it's going to do, and that's what a lot of people get wrong. They think that they need to predict every single thing. I don't know what it's going to do, I'll be honest. I don't know if we're going to move down further here or start retracing. The only time I have probability in my favor or the edge in my favor is once the market shows its hand. It hasn't shown its hand yet. It hasn't inverted any gaps. It hasn't had any sharp reactions. So even though we're in a macro, it doesn't mean I have to trade it. It doesn't mean that if price taps into this, so this bearish FVG, if price taps into this and sells off, it doesn't mean I have to take that trade. I'm not going to take that. I'm not going to talk through it. We'll use it as market structure. But again, it depends on how you like to trade. Do you like continuations? Do you like using fair value gaps? Do you like using inversions? Do you like trading like this or like that? So what I'd encourage, I don't know your real name, but say never. What I'd encourage you to do is like watch the macros, spend a couple months, a month watching the macros and determine what you like to do. Like determine if you like trend continuations like this, or if you like reversals more, because there's enough trade ideas to take advantage of both, and you can be profitable with both. But that's what a macro can do. It can spool or it can accumulate. And then I would study that. Ask questions, right? So if the macro accumulates, what does it do after? If the macro spools, where did it move from? Was it a high time frame fair value gap? How quickly did it move? How many handles did it move? Like these are the, I guess these are the things that you have to ask, and you have to have answers for yourself, because there's a lot of possibilities that could happen in the market, but you just have to, have those answers and make a judgment based on that. So it's a bit of a long answer, but it's an important one to talk about. And then I'll start answering some of these other questions. I should move to Miami. I think I answered that. I have been to America, but not to Miami. Really, I thought I'd have to wait to enter if I see a form of, So ideally you need to see a PDRA to enter, right? A PDRA, here's the thing guys, a PD array like an inversion, a fair value gap, a breaker, it's just an entry model. It just confirms what's happening on the higher time frame. So if you're looking for a reversal, if you're looking for a continuation, the creation of a PD array just confirms that you could be changing structure. That's all it is. Try Phuket. Yeah, I'll be heading to Phuket soon. I'll be heading there. I'll be there, I think on the 7th. I'll be leaving here in Australia on Wednesday. I'll be there at night time, but I'll be in more Phuket for a couple of weeks there. Opening range, been a nice TP area. Opening range is cool. Do I still trade with Apex? No, but I've considered getting back into them. It's just, at the moment, I'm with MyFunnel Futures and Top Step. As I go to Thailand, I might tone down the trading a little bit. So I'm just going to kind of cruise for the next couple of weeks. But when I'm ready to copy trade at some point this year, I might go back to Apex. I've got a few ideas in mind, but we'll see. Do I use the first presented? Actually, we'll go above. 𝐷𝐴, are you interested in any levels derived from the higher time frame? Yeah. So for me, all I look at, like it's very simple. Here, I'm looking at this 15-minute fair value gap. Now, I'm just looking at previous market structure. We've come up, we've come down. We've come up, we've come down. Could we come up again? Yes. If we do, we can look for an inversion somewhere here to take the price higher. If we invert this, or it doesn't bother me, I'll just look for a reaction out of this gap during the London session. That's it. So I'll wait patiently for the model. And then maybe later on with the Discord, in the premium call, maybe we'll talk through something later on. It just depends what we do. You know what I mean? But that's what I'd say. So not every macro, just because a macro moves, not every macro I'll trade. I'll just let it do its thing. Do I use the first presented fair value gap? No. No, I don't. It works, right? Here's the thing, right? Anything can work. I'm just going to leave it at that. Anything can work. I'll leave it at that. I don't want to get into too much detail, but anything can work. Any fair value gap can work. You could use the first fair value gap after 2 o'clock open. You'll find a model. Anything can work. I think just stick to something. If you like the first presented gap, use that. If you like other things, use that. And then collect data, because anything can work. Ashley says, what would you say really helped your psychology? That's where I'm stuck at right now. I've mastered my edge. A lot of people like that, mastered the edge, but psychology, I fear trading my stop loss. Yeah. Well, it depends, right? If you're trading from a place of fear, then I wouldn't even bother trading. I'd take some time to just continue learning the skill. So all I mean by that is, if you're afraid, oh, I might lose this eval and I can't get another one, I'll just take a step back, just chill. Chill for a month, chill for 2 months, get really confident in the skill and trade demo. Or trade very small risk on an eval or funded account, and that way psychologically it's not going to impact you too much. A lot of people like that when you know about the edge, but you're worried about it hitting stop loss, or you might be worried about losing an account. I've had a few people like that. Or a minor reversal. Like say for example up here, like I know Dren, you talked about this. You talked about like if you took along from here, you got to have a target, at least 1-to-1 in mind. So maybe your target was up here somewhere, for example, right? That's your target, for example. Now, when you enter, let it do its thing. And I guess the only way you build confidence doing that is you've got to have more chart time. You've got to just have more experiences, because then in your head, you'll know how often it does certain things. That's the best way to put it. It's like intuition. People talk about that. It's true, because your brain subconsciously will remember what's happened in the past. You'll remember what's happened in the past. And as time goes on, this is a 15-minute fair value gap, by the way, and this is the halfway point. As time goes on, you'll build more confidence. So the only reason why you're afraid of a reversal happening is, you're fearful. You're fearful. So you either don't trust the model enough, or you know the model, but you just haven't seen enough of it playing out. So you don't know exactly, like you're not confident in what it could do and still hit your TP. That's what I'd say. So if that kind of answers your question. Everyone has their own psychological things. For some people, it's fear. Other people, it's greed. Both will hold you back, because if you're fearful, you won't let the trade play out, or your risk to reward will be tarnished. If you're greedy, your account's going to be blown. I've experienced both. but it's a balance every day that you have to work with. And I guess, yeah, understanding that no one's perfect, no one has an 100% win rate for months on end. Great traders like 𝐴𝐸 or Trader Kane. 𝐴𝐸 had a 35% win rate. He took the biggest payout from Apex. That says a lot. So you don't need a high win rate. You just need to get time in the markets, take screenshots, and answer these questions. Answer, like if you have a model, say it's the inversion or the breaker model, how many times does price pull back and stop you out? How many times does price pull back and still move in your favor? How many times does price respect a 15-minute fair value gap and move away from it? But you have to have chart experience and then have answers to these questions. It's not something that, even here, like I could talk through a long up in price here, right? But that won't fix things long term because you have to see it for yourself. And then you'll build confidence. That's the main thing. So this is the halfway point. We'll see if we get a reaction back to the upside from this area. What would you say has helped your psychology? What would your lifetime payouts be with my fund of futures? That's a good question. So overall, my payouts, right? My lifetime payouts in general. Last year, I got my first payout in March, right? And it started with Apex. So most months so March, April, May, June, July, August, September, October, most months I was making 2,000 US. There was 2 months where I made 4,000. I think in about June or July, then I started like going into Top Step 2. I had a few big payouts there, 6,000, and then a few small ones, 800, 2 grand, etc. And then my fund of futures has been 2 grand, 2 grand. It's probably, it's getting close to the 10, probably, I'd say. But that's spaced over months. That's spaced over months too. So my fund of futures was last November or October is when I kind of went into them. And the first account, it might have been, yeah, it was the milestone account I started with first, right? Milestone account. Then it was the starter accounts. Now it's the expert account. So yeah. Have I lost accounts? Yes. And here's the thing, right? There's accounts in the past where I've been close to a payout and I've blown it. It's happened to everyone. But on the point of what Ashley's mentioning too, you have to, you have to accept that some things will go wrong in time, right? Some things will go wrong, but you've got to come back from that and manage risk as best as you can. 𝐴𝐸's mentioned this before, and I'm a big believer in it. If you can do things right 85 to 90% of the time, that's good, right? That's good. If you do things right 50% of the time, then you're going to see struggles. But you have to start from that. When I first started trading, my thing was fear. So my mentor taught me 1 to 2s. And I remember like I was risking say $500 on an account. This is back with my my Forex funds, right? Back, that's when I started. And I remember having accounts with them, and Union Wealth Management was another prop firm I used to be with, back with like CFDs and indices, not even futures. And I'd risk $500 aiming for 1,000, and I'd pull out like 300 because I was fearful. So that's how it started. And I remember watching like 9:30 candle, and I'd just buy the candle when it went up. And sometimes it worked, sometimes it didn't, but it's not good. But yeah, that's the payouts. And I aim for, my goal is 1 payout per month. I'm not saying I make 20, 30K a month, because I don't from payouts. But my goal is to make consistent money per month. And if that can alleviate my living costs or most of my living costs, then I'm happy. And as time goes on, what I've tried to do is try to build that up over time and try different prop firms. That's why I've tried different props to see what's going to work best for me, is what I'd say. So I've tried both. I've tried Apex, I've tried Top Step, I've gotten payouts from those, my fund of futures. So far I'm leaning towards Top Step and my fund of futures, depending on what Top Step does with the new rules coming up, depending on what they do. I might try out Alpha Futures, they sound all right. Traderify sounds all right too. Take Profit Trader sounds all right too, but there's so many options, right? So I don't want to have too much. I'm just kind of, trying out bits and pieces. But yeah, that's kind of the answer there. And then Damon, yeah, Take Profit Trader is pretty good. Am I bullish or bearish? I'm neither. So it might sound a bit weird, but I was thinking about this the other day. I don't really do weekly outlooks. So if you're from the premium Discord, I don't really do, and there is a fair value gap here, we'll just mark them out. But I don't really do like weekly outlooks. There's a few reasons for that. I don't want to try and predict the market. That's not my job as a trader. My job is to anticipate especially if I trade macros, what could happen in the next 30 minutes to 1 hour, right? So if you're expecting a reversal from the 15-minute gap, why would you be expecting that? And then you've got to match that with a PDRA, like an inversion or something. You still need to see more, right? But these are the things you've got to ask yourself. But I don't do weekly outlooks. I don't even do daily outlooks for the Discord because I will kind of flow with price and then maybe at open, because if you're from the Discord, the premium, right? I told them on the 15-minute chart, either look for reactions from this 15-minute gap or this one around a macro. That's it. So, you know, either one could have worked. This one would have been a break-even kind of framework here. And then now I just got to observe to see what we do in this 15-minute gap. That's all. So might sound a bit weird. I'm a scalper, but so say in a situation like this, I'm not saying it will, it could. Say we went up. Because of how far we've gone down, there'll be situations where I hold runners. So I might take between 10 to 30 handles, right, on a trade, but then I might hold for 60 or 70 if the runner, you know, projects. So I'm a big believer in 1-to-1s, 1 to 1.5s, and then leaving runners if it's suited. And it makes it much easier for me, like for my personality, for a lot of people, it makes it much easier because there's an analogy that people use about, you know, say you're reading a book, right? Say you read the first page. Is it easier to predict the next line or easier to predict the next chapter? The next line, right? You're not going to be able to predict the next chapter. And I'll apply the same thing to the market. It's much easier to anticipate what the market's going to do in half an hour's time as opposed to daily because there's so much that could happen in between. And I used to do that. Like I used to start on the daily chart, go down to the 4-hour, the 15-minute, align everything. You don't need to scalp, in my opinion. You don't need to. 15-minute, 5-minute, 1 minute, that's enough. Time frame alignment, use the 15 and the 1 minute or 5 and the 1 minute and you'll be sweet. That's what I'd say. But yeah, good question. Amir says, how do you know if the macro is going to be a continuation or how to deal with it? Well, you got to wait. Like say here, I don't enter off like fair value gaps. I wait for inversion. So in this situation, we've inverted this. Could we move down? Yes, but it's not my trade. I'll wait for price to dig down further and then look for that reversal. However, some people are going to take shorts and that's okay. So in terms of like knowing when price is going to go continuation or reversal, for me, if we're sitting inside of a high time frame PDRA, I'd prefer to see it act as support in this case. So I'll be looking for that framework. If it doesn't matter. I've put in, say, an hour, 2 hours into the charts, and I've gotten a bit more chart experience. If price, say, like for continuations, if price opened here, that's a new day opening gap, right? Or new week opening gap. Price opened here, and then price did this. Guess what I'll be looking for? Shorts. But that's because we've pulled back. So I don't mind trend continuations. I actually don't mind them, but I'm looking for specific things. Otherwise, I'll take the reversal, which is probably 70% of the time. And there's enough, trust me, there's enough in terms of trading to take plenty of good trades. Plenty. So yeah, that's what I'd say, Amir. Yeah, maybe we can link up, sort something out. Keep missing trades. It's all right. I wouldn't call it a missed trade. And I want to reinforce that point for a lot of people. I want to reinforce that point. If you didn't take a short here, you didn't miss a trade. Unless your model says that you need to take shorts. You didn't miss a trade. Like that's a big thing that a lot of people need to like reinforce and just think about, because if you have the mindset of, oh, I need to take a trade every time the price moves, you're going to get cooked. You're going to be upset. Oh no, I didn't take that move. It went 60 handles, but it doesn't matter. Like this here is not my model. So it doesn't bother me. This here would be my model. And I know, Drain, you took that long here. And so depending on where the market sits, is it in a higher time frame fair value gap? Is it not? Longs or shorts could be on offer if you're a scalper. But that's the realism of it. You know, you've got to be realistic about it and say, look, you don't have to catch every move. The thing that I've got posted on my Twitter, like the pinned tweet at the top of the page, pretty much says price could move 10 handles, 100 handles, 1,000 handles, but if it's not your setup, then don't worry about it. Just chill. just chill. Try to, right? Try to learn that you don't have to catch every move. Not every move needs to be caught, but you need to take the setups that make sense for you and your model. So if you're meant to take longs, you wait for long opportunities, inversions, etc. If you normally would take shorts here, then normally you take shorts, so you take a short. And sometimes it'll work out for you, sometimes it won't. Sometimes you wish you would have taken the other trade, but you got to stick to what you originally were thinking and be, semi-flexible. So that's an important point. Yeah, just a scalper. I would 300 ticks consider as a scalper. Yeah, I just use handles. Ticks is fine, but I just use handles. So I just grab, like say the risk to reward tool, I'll just use whatever. So say a stop loss was here, for example, and you wanted to go for a 1-to-1, that's fine, right? And then you'd hold runners, for example, in that situation. So what I'd say to a lot of people is, if my stop loss is 20 handles, I aim for 20 handles. If my stop loss is 30, I aim for at least 30, at least. If I believe it could run further because there's a lot of liquidity above or below, then I might hold it for like 1.5 risk and then take a partial. But there has to be, something there, There has to be something there, and it comes from tried experience. So even here you could say, well, if we invert this and then close above here, would you take a long? Well, we could talk through it. Even though it's outside of the macro, would I still consider it? Yes, because the macro would have done the important thing. So it's still using the macro, in my opinion. But we just have to wait and see what price does and how impulsive we look. That's all I'd say. Amir says, even I only trade reversals. Just wanted to know, yeah. So normally that's what I look for, and I'll kind of zoom out here so you can see a few good examples of continuations. So say this. That's a good continuation. Look. Price pulls back. This is New York session. Look, price pulls back. It sweeps liquidity. It taps into this 15-minute gap. And then what's it do? Creates an inversion. That's a good continuation. Entry from here or enter up here somewhere. You can do that with a tighter stop. That's fine. That is like a reversal, but it's also a continuation of the bullish trend. Same thing here, right? Price has reversed here. But I know this is NFP, but I'd wait for the pullback like this to sweep liquidity and then look for an inversion if you believe it's going to reach the equal highs. That's how I like to do continuations. I don't take trades if they're just shooting up or shooting down. I just let it do its thing. So yeah. How many points do I aim for per trade? If you can't find a trade in a 1,000-point move, you have a bad model. Yeah, interesting. Well, I'll give a good example, right? Say with the Trump tariffs that popped up, right? And the news about Trump tariffs, we saw price, right? And apologies for the internet connection too. But we saw price, for example, move, what was it? 1,000 handles or 1,200 handles for the whole, I think it was like the whole Asian session. We moved like dramatically, very quickly. And in those situations, I mean, there might not be no entry. Typically every session, every day, I would find a trade, typically, for the Discord. So Monday through to Friday or Monday through to Thursday when we have our call, typically we'd find an entry model, is what I'd say. And again, apologies for the internet, but I think we're back up a little bit, running a little bit. So a little bit delayed, that's right. Triple bottom and inversion, fair value gap, a bit out of the macro, yeah, I would. 15 handles. So the way I calculate handles, let's just say here, right, where price currently is, I'll draw out like a line like this. This is the easiest way, look, very easy. Have a look on this side of the chart here. Look where my cursor is, on the right-hand side. Now that blue line, I'll make it an even number just so we can do it easier. Say I get it right here. That blue line, this number is very small over here, right? But I'll write it out. This blue line represents 20,000. This is the easiest way, 20,020. That's what that says on the blue line over here, right? So if you wanted to go 15 handles, It's just adding 15 on top of that. That's all it is. That's all it is. So for example here, 20,020, it's that blue line, that value. If you wanted to go 15 handles, an easy way to calculate, add 15 onto that. So 15 handles would just be this. That's all it is for 15 handles. And you can use some of these tools. So look on the left-hand side to calculate that. You can use the long position tool, or here's a better one if you're learning. You can use this, the price range. So click here and then draw up. That there's 15 handles. I know it's very small, this text. I wonder if I can make that bigger. I can't, that's right. But that's 15 handles. But that's all it is. It's just 15 changes in the number. That's all it is. And handles and points for me are the same thing. So that's how I calculate it. 15 handles, 15 points. Same thing. That's kind of how I work with handles. But hopefully that makes sense, Mac. That's a good question. Someone says, which macros are the most important? So the most important macros, well, there's no best macro. So I'm just going to say that there's no best macro where you're going to say, well, you know, the silver bullet has the best macros. Not necessarily. It's wherever price structure is. So for some people, the best macros are the ones that like just move very quickly. Say, for example, like this one here. This is a macro here, right? That moves very quickly. Over here, there's a macro, or just before the macro, moves very quickly. For some people, that's what they think of macros as in terms of best macros. For me, the best macros are ones that line up with price structure. So, for example, if we mark out this macro here, look at this. So this is 750 to 810. Now, there was an inversion fair value gap entry here, which happens in the macro. It doesn't always happen in the macro. It can be a little bit before, a little bit after. But why is it a good trade? Because there's a 15-minute FVG here that we marked out earlier that price was reacting from. So that's why this macro is good. That's what makes a good macro. Macros are good that line up with price structure. Premium discount, OTE, 15-minute fair value gaps, 5-minute fair value gaps. But you have to study it. That's the thing. You have to put time into it and then study as well. We're getting through the questions. That's cool. What time frame do I use to spot reversals? So start on the 15-minute time frame and mark out any fair value gaps. Just do it. Just trust me. Just do it. Anyone watching, start with the 15-minute time frame. Mark out fair value gaps, and study how often price finds support or resistance. Number one. Then drop down to the 1-minute chart and see if there's a macro that lines up with roughly when the price taps into the fair value gap. Does that make sense? I'll also interchange the 15-minute and the 5-minute fair value gap. So depends on what price is doing, right? So that's kind of it. If that makes sense. Is there a video of back testing? I haven't done back testing, but I might do a video on that when I'm in Thailand. I prefer live market reading. I prefer that. Like if I could recommend something to you guys, back test just to see what happens. So back test in terms of, you know, you look at the markets and go, okay, how many times does price do this or price do that? Right? How many times does price do this or price do that? And then after that, forward test, you know what I mean? So yeah. Anyway, what's price doing? So here's the thing, right? In this situation, this would be a partial. This is the benefit of scalping. You'd be partialing here, in my opinion. And then I'd hold a runner and bring my stop below these bodies and see if we want to push higher. If we pull back, it doesn't matter, right? But this is something we talked about. We did talk about this before it happened. And this is what I do with the Discord. Similar kind of deal, right? And this is the beauty of scalping. Some people may have taken this bottom inversion too. I know some people take the lowest one like that. But that's it. You can do something like this. Look, you can enter off impulse. You can enter up here, right? Oops. And then take a partial here in this fair value gap and then go to break even. And that's it. Adrenaline, same kind of deal. Like I knew someone from the Discord would be in it. I knew 100%. And if you're from the premium, let me know. But I knew adrenaline, I knew you'd be taking that. 100% I knew. I'm like 100%. And that's the beauty of it. If price pulls back, it doesn't matter. Like you take profits in here because it's a bearish fair value gap. and price could retrace lower, and then you've taken money off the market. That's fine. Or you get stopped to break even, but break even, it's better than nothing. So look at this, right? If you draw a trend line like this from where price inverted the gap, that's 20.024. Price up here has gone almost 20 handles. Stop. You can put it below this candle, below the inversion. That's at least a 1-to-1. Easy. Easy trade. Do something like this. Enter here, stop here, done. And then go to break even. Or if you enter down here, well, obviously you got like a 1-to-2, doesn't matter. But yeah, that's kind of what we do. We'll talk about this more in a sec, but I just want to get through some more questions. Thank you for the help, no problems. YOLO trading, what 3 videos? Well, to be honest, the one that I posted recently, right? The live one's not too bad, but I posted one recently that's called Easy ICT Macro Model. It's about 16 minutes long, and I pretty much talk through how I trade. I'd study that, and then I'd probably study the live one, and then go through the other one. I'll talk about there's 3. So I'll get it up anyway. I'll tell you exactly what it is. And this for anyone too. I mean, all of them I think are pretty good, but depends how much time you have, right? And then let price do what it needs to do here. Let it run. Let it run. I mean, I don't want this to be a signal service. I didn't tell you to buy and sell, but we talked about it. In terms of YouTube videos, if you go on my YouTube channel, I'll give the titles in the chat. I'll look at this one. Maybe I can share the link. I wonder if that's going to work. I'll share it in the live chat here. So I'll look at this one. That's a good one. That one there is like a nice little overview of like the models I trade. I'll probably also look at this one here too. These are like guides. These are guides to how to trade macros, right? I look at that one, I look at this one, and then I'll probably look at the live session that I recorded a couple of days ago. That's what I do. So yeah. And who says you can't trade Asian session? Who says you can't have a good trade in Asian, This proves you can. I don't know what the market's going to do, right? In terms of the next 5 hours, I prefer price go up, but I could definitely see it digging down a bit further and then still going up later in this situation here. But yeah, those are the videos I'd watch. How you looking, Adrenaline? You've got a partial in, or you're still holding for a little bit? If you add SMT at macros in that lower time frame, that's very high probability. Yeah. If we have SMT here, even better. I mean, I was looking at ES before. There was no SMT, but notice I marked out this red line. We just swept the bodies. That's fine. 1, 2, 3 drives. 3 drives, respected the halfway point, came up, right? You might have taken a trade here too. Like I could probably see that in a macro with a stop here or a stop here. But the thing is, you got to be willing to potentially re-enter the trade multiple times if you need to, if you believe in the draw. Stop loss 10 handles profit. Yeah, nice. That's good. How do I deal with greed? I guess just by getting wrecked when I first started trading for many, many months, So when I first started learning in May 2023, nothing came out of it until the next year in March. So it's a long time. And getting wrecked time and time again in the market and then experiencing that. But also just accepting that, there's been many times where I've been up for the day and then I lose the account of lost for the day. And you just get sick of it. That's probably the main thing. You experience it so often when you first learn that you just get over it. And everyone has that point where you're over it. You're sick of like being up for the day and then you lose money in the account for the day. And I guess as price does its thing, you get better and better as time goes on. And also you're not trading from a perspective where you need the money. It makes it very hard. Like I don't come from a position where I've had a lot of money. I'm just a regular person, right? Working a full-time job at the start. Now I still work for my family business part-time as well. But I'm a regular person, so I have the same struggles like a lot of people. I live at a home, I pay rent, trying to balance the money spent for trading with other things. Yes, it's very tricky and it's hard when you're trading from a position where you need the money. It's very tricky. So if you can keep a job while you're learning, or you have a job or can make money on the side, it makes life much easier because then you're not focused on, oh, I need to make this money, I need to make this money. And that's what really wrecked me at the start too. So yeah, I was one of those people that said, oh, I'm just going to quit work and cut down very early on, very early on. In terms of how you can enter this, well, I guess there's two entries here. There is this inversion fair value gap. There's that one. Or there's this one here too. Or there's this one, like there's multiple inversion gaps. And this is like the macro inversion fair value gap model. So even if you enter outside of here, or wherever you enter, that's still technically using what the macro's done, right? And then, yeah, we'll see if this, pivots back down now. But it'd be a break even or one partial trade in terms of this. Ruben, should I go for low-hanging fruit or hold to the draw? Do as you wish. I'll take a partial. If you haven't taken money off, take a partial and then go to break even. That's what I'd say. Because then there's no risk. You know what I mean? That's what I'd be doing. That's what I'd be doing. Like if I entered long from here, there's definitely a partial coming up. Probably, to be honest with you, in this fair value gap somewhere, because I know that price could pivot from here. And then I'd be at break even. That's what I'd be doing. I'm not saying what I do is right all the time, but that's what I'd be doing. So yeah. And we talked about this. So from the start, like again, we talked about this. We could just, again, look at this 15-minute chart. There's a 15-minute fair value gap here. We could just reverse back down now. But this move, when you're a scalper using the macro, is enough to capitalize on. So you look for price, you wait for it to come into the gap. We sweep sell liquidity. We form multiple inversion fair value gaps, different entries. We break above these two down close candles. We form technically like a breaker zone mitigation block here. We close above here, you take a partial here. If you entered lower down in the move, well, obviously, yeah, you've got more handles to work with. But that's the benefit. Like the market could continue lower. Like we could just keep stepping up, move down, keep stepping up, move down. But if it decides to spool back up, this is where you can take advantage of those runners. But you don't demand that it has to. You don't need to know if it's going to as well. Like price could come all the way back down here now, but at least you're still taking some money off the market. And that would be done. Like if you take a winner here, you're done for the day. Don't come back on that account. If you've got a separate one, maybe trade it later. But don't come back. You've made money. Don't risk it. Capital preservation is the main thing with trading. And in terms of like greed, how to deal with greed, again, capital preservation. Ask yourself, right, if you've made money for the day, how would you feel if you lost money for the day when you just made it? Probably not good. So remember that and remember how you feel when you've gone against your rules. And as time goes on, people learn. But yeah, this is really nice. Really nice framework, really nice setup. And just being patient for waiting for the market. Let it drop down. Let it drop down. This setup repeats again and again and again. It will continue to repeat. Every week it'll repeat multiple times. And this is an A+ setup because it delivers from a higher time frame fair value gap. The only thing that'll be better is SMT at the lows, but it's still really good in my opinion. Any of these entries is good, right? And yeah. Do I use SMTs? Yeah. So like, say for example, if the NASDAQ here made higher swing lows and ES made lower swing lows, then I'll just say, cool, it's an extra confluence. I don't need to see it though to take a trade. I don't need to see it. There's enough here to take the trade. And the next video, I'm sure you guys will like it. I'll be talking about exactly what we're seeing here. So it's kind of ironic how I'm talking about now the 15-minute gap. I've kind of called it the macro solar system. Think of the macro as like the sun, if you believe in the model, right? It's like the sun in the middle. And then think of the planets that revolve around the sun as all the other conformations you could have. Inversion fair value gaps, impulse, 15-minute fair value gaps, low resistance liquidity, order blocks. These are the extra things that constantly revolve. And you can combine whatever you want to make the model. So yeah, if this doesn't illustrate it, then I don't know what will. I mean, live in the market, the macro pivots, that's one function we talked about. I don't know who asked that earlier on, but yeah. If you're here, give this a like, leave me a comment, maybe for later on too. And I'll get through some of these questions too as we go through. Is there a replay? Yeah, so this will be on my YouTube channel. So I think automatically once I shut it off, we'll wait a couple more minutes, but once I shut it off, then it'll be on my YouTube channel. So you guys can view that for later on. But this is typically how I structure with my Discord. I'd be a bit more involved here talking through price. But this is typically what I do for the calls. And it proves you can trade any session, right? Just know that you can trade any session. There is enough movement for Asian session to take advantage of. You just need to look and wait for the right setups, that's all. We're seeing, yeah, that's true. And Dren still holding. And now because we're outside of the macro, like you don't expect too much. You let the market do what it wants to do. Sometimes we spool, sometimes we don't. The macro has, you can see the macro's gone like this. The macro's gone from this way to this way. The macro's gone from this way to this way. Go back here. 950 to 1010. Let's get that up. The macro's gone from this way to this way. Interesting. Okay, another macro. Just look at how many times it repeats, right? This is the best thing to do, and look at how many times it repeats. This macro, 450 to 510, it goes from this way to this way. This macro, 350 to 410, same thing, goes from this way to that way. Study it. Study it is what I'd say. Because I could tell you, like I could talk through all my models here today, but you still need to put in the study. You still need to put in the work. The best people in the free and premium Discord, Adrenaline being one of them, you know, you put in the work. You put in the work. That's the main thing. And yeah, I don't know. I didn't know it was going to be good price action, but it turns out to be all right. You know, Mondays. Called the long out of the inversion. Great stream. Yeah, appreciate it. So yeah, patience, bit of waiting. Any questions, leave them in the comments, and we'll check on the Discord. How are you guys going in there? I'm sure a few people are posting up some stuff. But yeah, I've got a free Discord if anyone wants to join that. We've got a good community there. Jay took the short, which is still feasible, right? So if you're on the call, Jay, congrats. Short during the macro and targeting the 15-minute swing low. And that's the thing, right? So Jay, I think, took a short from here, and that's his model. So he took a short down here. Some are taking longs from here. Both are fine. I'm not saying Jay's wrong or I'm right. No, both people are right because both people have followed what they need to follow in terms of their model. That's really important. So, yes. But yeah, I'm just a regular person, guys. I just, you know, if you put in the work, you can do exactly the same. When I first started learning, yes, it's hard. You have days where you're like, what am I doing with my life? You know, you sacrifice time, or you might have nights and days where you just don't know if you're going to make it, but you just got to keep going forward and keep pushing forward. You have to have belief in yourself and be realistic about it. You're not going to win every trade, and you have to get okay with losing trades as well. Fritz the cat, good stuff. Yeah, that's it. That's it, you know. Combine what you need. Like, you don't have to copy me exactly. I wouldn't encourage anyone to copy me exactly because you're going to have different psychology to me or different mindsets to me in terms of how you like to trade. You know, I know some people that they probably would have taken this long, or some people I know that I teach would have taken this long here. I know that. Other people, like for me personally, I would have probably waited for this one. More confirmation. Then I would have taken a partial and then just break even and accept it. So what we've been on for about an hour, and you're done. You're done in an hour. That's all you need to do. And sometimes, you know, it might be a bit longer, but then you're done for the session. Leave the charts and then come back. Say you trade the London session. I'm probably going to come back at about 1:30 New York time with the Discord. So probably over here somewhere. And then we'll go from there. But yeah. Send me an email, right? If you have any issues with anything, send me an email. I'll post in the chat and I'll give you the link. What was the main element that tipped you over into profitability? Not just one thing, multiple. So multiple, because I was like many people where when I first started trading, you know, you want to make money. You see people making huge amounts of money, which is very possible, by the way. But, right, for me, I was like, I knew the model. But what would happen to me, and a few people like this in my Discord, what would happen to me is I'd have 2 good days, 3 good days, then the account's gone. Or 3 good days, I'd make 1,200, then I'm back to break even. And so what I really needed to control was the greed and the fear. And a big part of that, a lot of those days, I was up for the day, and then I'm like, oh, let me make a little bit more. Like I was up 220. Oh, let me just try to make 500. Let me play with the profits. The profits go back to break even, and for me, that's the thing that makes me go downside. So I had to control that. So once I controlled that, and I like Top Steps feature, lockout feature, it's really good. Once I controlled that, I went for less risk to reward too. I started with 1 to 2, now I go for 1 to 1s, and then I hold runners. When I did that, those two things combined and accepted losses and was more patient. Again, it all takes time. Those 3 things on a daily basis make me profitable, but that's what allowed me to get my first payout with Apex. It's combining those 3 things. That's what I'd say. Yeah. Interesting. Yeah, send me an email, Journey of MMP. Send me an email and we'll have a chat if you can. How's my win rate at 1 to 1R roughly? Well, it's not, here's what I'd say, right? My risk to reward normally is not 1RR overall. It's not that. It's about 1 to 1.4, 1 to 1.3. And depending on the week, it could be more because sometimes price will run really fast. So last week, for example, say with the Discord, we actually went for shorts, right? So I talked through shorts here, down to there. That was a massive risk to reward. It was more than a 1 to 1. It was like 1 to 1.3. But it doesn't always happen. This one here was also quite a big risk to reward, partial than like a 1 to 1.3. So you balance it out, right? Some days and some weeks it will be a 1 to 1, but my win rate can sit anywhere from 50 to 80%. 50 to 80%. And that's enough. If the weeks are only 1 to 1 and I'm 50%, I'm pretty much just break even. But most of the weeks, it's more than a 1 to 1 risk to reward on average because of the runners. And that'll bring it up to like a 1 to 1.4, 1 to 1.3 at least. So even if I have weeks that are 50%, I'm still able to capitalize on that. That's what I'd say. But start with that. So start with a 1 to 1 first. You know, start with a 1 to 1 like this. Do something like this. And you might say, well, why does the stop loss go there? Well, have a think, right? If price was to disrespect this inversion, are we really bullish? Probably not. So because of that, that's why the stop loss goes there. And you start with that, right? Literally, like start with a 1 to 1. Take some off there. And then what I tell people to do is hold to like a 1 to 1.5. That's what I say. Like take a partial, then hold a little bit more. Or if you really believe, like see this massive impulsive candle here, that might be your 1 to 1, but I usually market execute to enter and also market to exit sometimes. So if I see this big candle, I'll probably just let it do its thing. And I just kind of watch it a little bit, see if I can squeeze some more juice out of it because of how impulsive the candle has been. That's what I'd say. So it's a balance, right? You're not going to get it right all the time. You won't, right? Sometimes I'll be like, yep, let me hold a runner. And it would have been better to just take it off at all 1 to 1.5. But it all balances out is what I'd say. That's what I'd say. But yeah, this is what I do. I've been doing this macro strategy for a while now, probably for about 1.5 years using this exact strategy, and it works. Go back, like I said, back tests. We've seen it live here today. I'm not a perfect trader. I'm not the best trader in the world, but I think I'm able to help people, if even just one person, to build more confidence. That's the main goal. That's the whole point with this YouTube channel and with anything I do, just to build confidence in people so they can do a similar thing. And it takes time. It takes time. So any more questions, let me know. I'll probably hop off in 5 minutes. But yeah, pretty good stream. May do more of these in the future. Once every couple of weeks, potentially. We'll see how we go. And I'll let you guys know. So keep an eye out on Telegram if you're from there, or from the Discord. I'll post about it on there too. But any more questions, let me know. This will all be recorded anyway. So I'm pretty sure it posts straight away, straight after I end the thing. I risk different amounts. So on that point, on that topic, If I really like the setup, I'm going to risk more. If I don't really like it too much, I'll risk less. Risk management, understanding, when to put risk on and risk off is hard. It is tricky and it takes time. So most people typically on a 50K account would risk this amount, and that's completely fine. If I like the setup, I'm going to risk more than that. If I don't like the setup, I'm going to risk less than that, because if I believe, and here's the thing, this takes time. If I believe that I may have to re-enter the same trade, I'm not going to risk $400 or $500 because it's too much to risk for one single trade. If I believe, say in a situation like this, that the market should reverse based on my data collection and I should be able to get a partial or one-to-one, then I'm going to do it, right? If it's an A+, and this, in my opinion, is an A+ setup because we're delivering from a higher time frame FVG and we've swept sell side and we've got nice impulse on these candles. It's an A+ setup. So I'll risk on this a little bit more than this for me, but everyone's different. So try out, start small is what I'd say. Start off small and then try like maybe on a demo account first. When you think the setup's A+, try on a demo account, risk a little bit more and see how often it works, how often it doesn't, and get good at doing that, because you got to let the runners run and you've got to know when to put risk on and risk off, because you can have a 35% win rate like JCap, but he still pulled out 2.5 mil from Apex because of risk management, because when the setup was really good, he put risk on. And when he didn't like the setup, risk was off. That's the important part. But that's what I'd say, yeah. That's the best way to put it. That's the realistic answer. Yeah, I might do a few more in the future. I haven't done a live session like this for a long time. I mean, for a very long time, live market reading. But yeah, this is kind of what we do in the Discord normally. It's a huge difference when the candles have strong momentum. Yeah, 100%. And that's one of the things. The macro solar system, right? I'm going to call it. Impulse is one thing you're looking for. Impulse. I avoid getting chopped up. Yeah. But yeah, good to chat to you guys. Any more questions, let me know. I'll hop off in about 3-4 minutes time. Gonna work on the YouTube stuff, work on content. So I'll be going away soon to Thailand. I want to pump out some stuff and have it all ready for you guys to go. I've got a Twitter, 4V Trading. I've got an Instagram. Follow me there if you're not already. And if you want to join the free Discord, do that. Do that. Mainly inversion gaps, mainly inversion fair value gap. That's pretty much all it is. Like this trade today we talked about, it's simply we wait for the 15-minute, number 1, tick. We wait for the macro, number 2, tick. We wait for an inversion, number 3, tick. That's it. That's it. That's pretty crazy. So yeah, and if you're from my Discord, I'm going to still be active, but it's hard because I don't really know. I don't really have too much planned yet in Thailand, so things could change. I've told the premium guys and girls already, but things could change. Need to enter fast and exit fast, yeah. So you get good at it. So say, for example, if we go back to replay mode back here, what am I thinking in my head at this point? If we invert this fair value gap, then we can take a long. So we've got a couple minutes to plan it. And then as price plays out, then of course, you're watching, you're waiting for the inversion to happen. And at this point here, what I'd be doing, right, I'd be getting up my risk to reward tool on the side, and I'd have my stop loss where I'd kind of want to place it. So if the candle does close the next candle, say for example here, next one, then I'm already ready to enter. Like I've got the position already where it needs to be. This candle closes, boom. And I might even get a better feel because of market execution. So it takes time, but yeah, you give yourself a couple minutes to plan it out and then go from there is what I'd say. My trip's on the 7th, so I should be leaving here 7th. I'll be in Thailand. Yeah, probably, it's Monday now, so Wednesday, but yeah. I'll be moving around. I'm going to a few other places in Thailand too, but that's what I'd say. For the next macro, if you want to take continuations, I say this to the Discord too, look for a pullback and look for price to push up. That's it. Nice having you guys here. I'm going to call it there. Hopefully everyone got something from today. I'm going to record some videos now, get into the content. If you have questions, again, send me an email or join the Discord or ask them on YouTube because I'll probably answer it, pretty quick. I'll try to get back to everyone as long as the question is asked in a nice way. It's the best way to put it. But send me an email if you've got questions about the Discord, about YouTube, about trading, whatever. Happy to help you out. Enjoy your weekend if you're from America, because obviously it's almost bedtime. If you're from Australia, Asia, then ready for a new week. And we'll talk very soon, guys. All the best. All the best. And this will be obviously up anyway. So this will be up. So if you want to rewatch this later, this will be up. I'll post about it in Telegram later. Good one to review. But I'll just leave you guys with this. If you want a continuation, look for something like that. And that's it. Peace out. All the best. Talk soon.